broadcasting from Lake Norman and Davidson, while serving all of North and South Carolina to the Florida coast and the Tennessee mountains. They are the Mortgage Planners, the Carolina's #1 real estate and mortgage radio, a premium lending experience with a planning approach that focuses on building wealth. Ranked top in the nation for over 3 generations, with well over $1 billion in closed mortgages and 3-time best-selling author. Here are your hosts, Brad and Jacob Roche.
Welcome to The Plan. This is Brad Roche, the Mortgage Planner, 704-412-2727. And we got a good intro coming in. That was good. I liked it.
Yeah, I like that.
Sound famous, man. We sound good. The Mortgage Planners.
Yeah, it's fresh. I like it.
Fresh. That's the word we're using. Well, welcome back to the show. First-time visitors, you're in for a treat, I promise. If you've tuned in before, thanks for joining us back. Veterans Day was this week. Great week. We've got a deep thank you for our veterans who have served and are serving. We've got a big tree of family on that one. Not me or you.
Yeah, no, neither of us.
I sure thank my dad and grandpa, who both served, both grandpas. Dad who served, my nephew serving now over in, he's in South Korea, correct?
Yeah.
So
thank you for your service.
Yeah, thank you. That's a big deal. We get to do what we do. I had a friend of mine that works at Element, had a post he did the other day. Jumping out of a plane, he has the camera in front of him. And he says, "Thank you for your service. You allow me to do the things like this I get to do." And my man lets loose.
Oh, wow.
Yeah, and he jumps off the plane. So it was pretty cool. But there's my favorite story of in 30 years of doing this comes back to a veteran. Oh, I've told you this. I know. So this will be a repeat.
A good one.
I might even said it on the air. It's my favorite. You think about the thousands and thousands of loans we've closed. We're well over $2 billion in closings. And you meet people along the way, and this guy and his wife have been in our family, in the office, for probably the last 10 years.
Yeah.
Coming in, dropping by. They'll go to the restaurant at the Harbor Club and stop in and see us. Pretty cool.
Yeah, I've met him too.
Yeah, you've met him several times. You know who I'm talking about. And when he had first called, he was referred in, which most of our businesses referred in someone who's used us or wants to take great care of the people they care about. Well, he comes in and older guy. I think he was around 65 at the time. Wife was maybe a little younger. We'll call her a little younger, right? A couple years. And they came in and buying a house. And I talked to him. I said, "Hey, you're buying a house?" He was renting at a place. And I said, 65. I had to ask, why are you buying a house now for the first time? Like you've never bought a house before. And his pattern was just, raised to rent it out and not rent property. They also took care of a older lady where they lived in part of her home for a period of time. She had passed away. So it just really wasn't a need in his journey, right? But 60 some years later, he says, "I'm going to buy that first house." And I said, "Why? Why don't you just go, why not go rent?" Things like that. And he said to me, and this answer is really cool. He says, I want to have my own damn grill. That's how he said it. I want to have my own damn grill. I said, "What?" Because he says in the apartments they share. He says, "You know what else I want?" I said, "What's that?" And I can appreciate not sharing a grill. You ever share a grill? You got an apartment?
Yeah, once. It's not very fun. It's normally weird. Left dirty.
You were at a college place though, hanging out with cute ladies hanging around, guys out there partying.
I was at a luxury apartment complex in Uptown. It was a nice spot. People leave them dirty regardless if it's luxury or
it doesn't matter. You're taking care of your own grill. So hey, my man, let me get my own grill. Okay. What else? What's the other? He says, "There's one other reason." I said, "What is that?" He says, "I want to hang my flag." And that stuck with me.
Yeah, a big flag out in the front yard.
I want to hang my flag. In the apartment complex wouldn't let him do that.
Oh, yeah.
Yeah, no flags out on the balcony. So we made it come true. He's homeowner and then homeowner again. They've made over a couple hundred in equity since our time of meeting.
Oh, cool.
Changed the whole thing. Changed their whole pattern of where they were going because of real estate.
Yeah, exactly.
And the reason why I want to hang my own flag. So now think of that, the veteran saying that. And then I think of my own house, and you think of your house, and you think of your house, if you're listening, you got your flag up. That's somebody who served the country, and that was one of the biggest things to home ownership was to be able to hang my own flag.
Yeah,
and it makes you want to run out and go do mine and yours today. I had one up. It fell off in a storm, but it's time to get them back up.
Yeah.
Put out the flag. Thank you again to our veterans. We appreciate everything you've done. From a VA standpoint, we serve a lot of veterans and have over the years, not just being that one story. But a lot of advantages to a VA loan.
I think you're leaving out a big part of that story.
What? The ending. Oh, yeah. I forgot. The flag, yeah, of course. So he told me about it. You're right. I left off the whole best part of the story. At closing. This was at Ben Thomas's office here at the lake. And he had the closing was all set up. Called the real estate agent. I believe it was Lori Lawrence Real Estate over by the Point, their neighborhood there, was one of the agents. And knowing I want a grill, knowing I want a flag, hey, where do you go get that? Brother, you go to Lowe's.
Yeah.
Lowe's corporate's here, baby.
Yeah, they got it all.
So I made I don't know if I did. I'll put this on, my staff may have helped coordinate. But they called Lowe's and said, hey, here's the story. They repeated everything I just told. Oh, wow. So here's closing. Anything you can do to help us, we'd really like to take care of this veteran. Lowe's steps to the plate. I'm thinking I'm going to buy a grill. They gave a gift card. They showed up with a gift card. I'm like, why don't you bring a grill? You know what their answer was?
Yeah.
Every man should pick out their first grill.
That's fair.
I would agree with that. They brought him a gift card. And then they also brought, and they're in the vest, the Lowe's vest, they're 4 of them show up, 3 or 4. And they got out the biggest flag. I'm talking Mac Daddy. You got to have a pole to hang that one on, buddy.
Oh,
and
cool.
They spread it out and took a picture of closings. One of my favorite closings.
Yeah, wow.
But yeah, that was the best part, wasn't it? Thank you to Lowe's. Thank you for the support as well on that deal. 10 years ago, at least 10, 12 years ago, one of my best here in the Carolinas. Impact, man. And boy, did he impact us. Knowing him and his family, it's been an honor just knowing them and some of the stories they've gone through. He's a big hanger-outer downtown at Richard's Coffee Shop.
Oh, really?
He loves going down there, the museum. Okay. Have you ever been there?
I drive past it every day.
You got to go in.
No, I've never been.
Man, they had some guys playing music in there, like 7 or 8 of them sitting around playing music. Oh, wow. Coffee tastes like it should. Maxwell House, right? Right? Yeah. That kind of coffee. Yeah, right? And just a good time. A lot of different things to go around and look inside it's like a museum.
Yeah, I've seen that at downtown Mooresville.
Really neat. Yeah.
I honestly thought it was just veterans only.
No. Go and get you a little breakfast and check out across the street. They got the breakfast going on. Go in there and check it out.
Yeah,
pretty neat.
Check it out.
Richard's Coffee Shop. Free plug for you. This show is brought to you by Element Home Loans, our proud lender and funding loans that we work through. 704, what's the number?
704-412-2727. I write it down. No.
Yeah, I've been saying it for years. I should have it right. So we've got a great lineup for you today. We've got a unique situation. Client called in the other day that we have structured, and I want to share with you the way we structured them. Selling their house, need to buy a new one, closing dates not matching up, lots of equity sitting in their house. How do I get to it to move to the next one? What were the options, and what is the plan that we painted for them? So we're going to come back, take a quick break. You are listening to The Plan. For more information, go to fortheplan.com. Stay tuned. We'll come right back and give you the little story on how to structure your next deal.
Welcome back to The Plan. This is Jacob Roche for theplan.com. I'm joined here with Brad Roche, the mortgage planner.
fortheplan.com.
Yep, 704-412-2727. I wanted to go into my best VA story since I've been working, and I would have to say it's a client that was looking out in the Lincolnton area.
It's a good area. I like it out there.
Yeah, it's
You've been out there much?
It's growing a lot. A few times I've been out there.
Good little downtown.
Yeah, it is.
Good little downtown.
I know you like the breakfast.
Yeah, buddy.
Breakfast spot out there.
I went and ate by myself. How often did you do
really?
that? Yeah, I do.
I
enjoy it. I rode
Invite me next time.
No, hey, I love you, but sometimes it's just nice to go chill. And, and it's weird, like eating in movies are kind of, I like to do it with people, but once in a while, hey. Anyway,
that's fair.
Tell me about the lady in Lincolnton.
Yeah, she was a veteran. I have a couple stories I could bring up, but this one specifically, they were in a pinch, I would say. So they had 2 cars I needed, and then they also had a piece of land that they didn't want to get rid of. Well, they ended up selling the land because they didn't need it. There was a lot of equity in it. They went 0% down, but they had 2 cars that was holding them back, debt to income wise. So,
and you can stretch debt to income pretty good. You don't ever want to go off the rule of like 45% because you can get it a lot stretched higher.
Yeah, I can go pretty high. And with them, we were pretty high. Husband had just got a new W-2 job, and he was going to be earning commissions, bonus, but wasn't at this time. So the debt to income was tight. So how I had structured the offer is to go into the offer of the house that they saw that they liked, 0% down, like I was saying, but have the seller contribute 4% towards debt and then 2% towards closing costs.
Wait, what?
Yeah.
So that's not normal on every other deal.
Well, you can only do this on VA. So you can pay 4%, or the seller can pay down 4% debt of the buyer.
So they can do a total of 6% closing costs.
Yeah.
But 4 of it can go towards improving your buyer's situation, which is what you did.
Yep. And then 2% can go towards the remaining closing costs.
So what'd you do with it? How did that help them?
They paid off a car. So
how much was 4%? They didn't know too much.
It was about
10, 15 grand maybe?
I think it was just below 10. Okay. So that car, they really wrapped into the loan.
How much of a payment did they have on that?
It was about $400.
Yeah, so they eliminated that with the seller paid closing costs, negotiated in the deal. So you could say seller paid or financed on the deal, but it saved them $400, and 10 grand on a 30-year fixed at 6% ish, in near $150 per month to add that on.
Yeah, so it was really cheap for them, and that was the only way we were able to get approval. So we had to structure the deal in a way to be able to get them into a home. Otherwise,
even if you didn't have to, though, that was pretty killer. That's a good way to do it.
Even if we didn't have to, yeah, you're right.
We've used that a few times. I actually had a realtor call me. This was years ago too. She said, "Are you allowed to do that?" And I said, "Yeah, I'm allowed to do that." She said, "Are you sure?" "Yeah, I'm sure."
Yeah.
His question, that seems pretty shady. I'm not being shady. It's real.
Not many know to do that. I don't think that it's common knowledge about a VA loan to be able to negotiate seller paid closing costs and things like that.
The only negative, when people, we have a client now doing 2 DSCR loans, right? And he's putting, DSCR is just based, he doesn't have to qualify. It's income based. He's putting 20% down. This guy's putting 25 down, but you have to put down 20. And he can buy 2 of them based on the rent cash flow. And when you're putting down 25, 30%, you're usually going to get pretty good cash flow.
Yeah.
So anyway, these are 2 pretty easy deals for him. But I think that the major part, when you're looking at the whole circle of how you're looking to finance, he's asking for closing costs as well. Well, just like your VA lady was. Well, aren't you financing that in technically when you're negotiating? Yes. And there's argument to, I don't want to stretch my car or the closing cost over 30 years.
Yeah.
There is an argument to that, I think is pretty fair. However, cash is king. Like with this guy in particular, and them, to qualify, they had to do it. But even if they didn't, man, you could easily add, here's my solution, add $50, $80 a month, 100. Remember, we talked about prepaying the mortgage a lot. Add it to it, knock it out, get rid of it.
Yeah, exactly.
A lot quicker than you would have done on the car loan. Or for this guy, the reason I brought up the DSCR guy doing the 2 rental properties is because he has asked for 2%, I believe, in closing costs, getting about $9 grand on the deal.
Yeah,
no, 2 or 3.
It was 3%, which is allowed on DSCR. So
he grabbed 3%, which is about $9 grand for him, and he's using it towards his closing costs. So the idea being, it's financed in. His mortgage payment going to go up? Yeah, probably about $30 for that per month, and he has the ability to prepay because he's going to cash flow on it, and it keeps. $9,000, that's $18,000.
Just in closing costs.
Not that we're charging a lot, but he can use to his advantage for escrows, for prepaying the rate down, whatever he wants to do. He's got some options.
Yeah.
Can't pay debt like a VA loan.
Yeah.
But all of his cash then is kept in equity, meaning he put it down on the house. He didn't spend it on closing costs, which will allow him to be able to go buy number 3 and 4.
Yeah, exactly.
Instead of spending it on costs.
And that's a really good deal. Yeah. So really what he's walking in with is 25% equity.
Yeah, but you think about how crazy it sounds. You're adding on, $9,000 of financing and closing costs. And I also don't think you should prepay a ton towards the rate. Like I want all that to go towards the crap of getting there, appraisal, title work, our fees $1,000 or so. And all of that adds up, appraisal fee, escrow account for taxes, insurance, the interest adjustment. You don't have a payment for a month or two. We could stretch that to 2 for him on these. So now he's got 2 rental properties, both vacant, and 2 months before his payment kicks in, and the seller covered all this stuff. So he only walked in with his down payment. Now you could say, oh, let me use some of that $9,000 towards points. Okay, I'd rather use it towards the things I talked about and better the price if we use it all. Because of, I guess there's a lot of reasons behind it. Because he's only using his cash as number one. Number two, I think that there's a huge benefit in being able to go refinance later and not pay a bunch towards the drop in the rate. Like even if the seller pays it, I don't think it's good money spent.
Yeah, like when he comes back to refi, I mean, it's not put cost towards that one. Yeah, I would say, but have the seller pay this time.
Now he'll have a huge benefit. He's already logged on our software, which manages your property. We've got that at fortheplan.com. If you have a house and not being managed, and you're thinking, oh, I get a statement, that's not being managed. You want to have it plugged into a system that pulls houses around you, AI-driven, knows the competition of your value of the house, the sale price of the house, prepayment calculators to take advantage of your what's called your effective rate versus the note rate. So if you got 6.5, how do you make it 5.5? You can prepay and really reduce the interest. It has all that in there, alerts in there. Here's where I'm going with it. You can load in multiple properties into that site, which now you're monitoring. He's going to be able to monitor and manage all 3 of his properties in one location, regardless of where he's paying the payment to. And it keeps track of your balance. It keeps track of the liens. It keeps track of everything.
Yeah, it's an investment portfolio, completely free.
It's badass. I think it's one of the best tools out there. So if you don't have that, you can go register for free at fortheplan.com. Plug in your address. We're not going to call you and be like, hey, man, want to refi? We're not going to call, hey, you want to move? It's not the intention. When the time comes, we just ask for the opportunity that you reach out to us at fortheplan.com at Element Home Loans. Help you out with your mortgage.
Yeah, give us the next shot on the next one.
Right. And it may come, it may not, depending if you decide to stay. Now, these people that have another story I'd like to share on how we structured a deal. We've got some time in the segment, but this may run over. They have a house in the immediate area that they only owe about $300,000 on. Pretty good.
Yeah.
Considering it's going to be listed or worth about $900,000.
Low, very low loan to value there.
Yeah. So they're sitting real pretty. I think a lot of people are.
Yeah.
You know, they're sitting with good equity positions, all locked up at 3.5%. Well, their family, kids have moved. They've been in this house for a bit, quite a bit bigger. Bedrooms and things are on different floors. So they want a ranch that they could be able to live in, and they found one. Found a really nice house, and it's priced about the same as theirs is, but smaller, some more land, all on a single family. So they're part of their journey, moving into a downsizing, if you want to call it that. It is smaller, looking at adding a pool and things like that. A lot of equity tied up. Now, they have cash. They've got IRAs and things, but if they pull those, they've got to put them back within 60 days before they get taxed on it, or just take it and take the tax. So we don't want to do that. We want to use the equity in their house to move them to the new one with limited, I would say, exposure on them. I want to look at the like if I put a bold title on this, it would say transferring equity.
Yeah.
I'm transferring the equity. What's the cheapest way that we can transfer equity from their house they have now into the new one before it's even listed? And there's a cool program we've used several times called Knock.
Yeah, Knock is great.
You know a lot about that?
Yeah, really, we don't count. I mean, it's a bridge loan.
Yeah,
to say
a lot of people know what that is. Yeah.
So using the equity in your last house or your departing house for the new one, we don't include your current house payment or your departing house.
We don't have to.
Into your debt to income.
You qualify for more. It's way better.
No payments for 6 months. It's a really good deal.
They take a reserve. So they take your equity. They go online and they pull a value of your house. So if you have it listed and the online value is higher, they're going to take the lesser of the two. Okay, so the same as we do on underwrite, if you had a credit score, you and co-borrower, one score is lower, we're taking the worst. So the loan is technically, I would say, stacked against the home buyer.
Yeah.
Worst case scenario. Well, so now they want to move they've got this equity or bridge loan that they want to grab a hold of, and how do we transfer that equity? Knock is one of them that we use. They'll take, like you had said, those 6 months of their payments as part of the equity. They're not giving it to them for free. They're pulling it out of the equity they have, and they're going to park it in an account and pay 6 months of their payments so they don't have a double payment on their house. That all being okay, there's a fee to that. And there's also, if you called around, there's some local community banks that offer what we would call a bridge loan, pretty similar. I'm going to talk about fees and accessing the equity. I'm also going to hit on HELOCs, home equity line of credit, as an option between knock, redoing the mortgage altogether, which is that would be a rough way to do it. Cash out refi, very expensive on that too. There's a lot of options to access it because they got good credit, they got good assets, they got good equity, but their journey's changing.
Yeah.
And we're going to walk you through how that journey can play out at a minimum exposure to them so that they capture the most amount of the equity on the sale of their home.
With a time frame in mind as well.
Yeah, right? Making it all work. 704-412-2727. If you have a house and you've got a lot of equity and you've thought of moving, stay tuned for our next segment. We're going to talk about how to make that happen. Welcome back to The Plan. This is Brad Roche, joined with Jacob Roche, the Mortgage Planners. 704-4... Why did I do that twice now on the show? 704-412-2727. You know what? I'm going to use our other number. 855-4-THE-PLAN.
Yeah, that's easy.
You got to look it up on your phone, though, and know the letters. It's kind of weird. Or just type in fortheplan.com. You got us. We're joined back in the studio. Veterans, thank you. We talked a little bit about advantages of using us on a VA loan and some of the great stories we've had helping veterans through the market. We're talking about a couple that called great income, great assets, savings, IRAs,
credit.
Great equity, great credit. Yeah, all the way around, they got a good position, except... Buddy, we're at 3% on $200,000 left on their house they're in now. Their mission was to pay it off. It's too big of a house. We found this beautiful new construction we want to go make an offer on. How do we get there? And so we talked around a few different ideas, knock being one of them. Now, the advantage with knock, not for this couple, is, well, there's a couple advantages to this. Let me say it this way. So the advantage to this couple would be that they can, while they may... I guess they didn't have to do that. They can carry both homes is what I'm getting at. So knock will allow you that if you have a house and you don't qualify for both and you're approved for knock, you would then make a non-contingent offer because this falls into place as us not having to use it to qualify. So if you are a borrower with a lot of equity and you have to sell your home in order to get to the next house, this program works.
Yeah, it's excellent.
And I said have to. Like this couple, their debt ratio is very low. They could keep both houses and wing it and say, hey, I don't have a new house payment coming up. They could pull cash out of an IRA and do it all without involving any mortgages. They really could. Yeah. However, for them, knock, they don't really need it. They qualify for both. Knock can be around a $10,000 cost to do this.
Oh, okay.
Like I've seen a lot of the fees come over. It's about a flat fee, $9,000 to $11,000, depending on what you're doing.
I've noticed that. Yeah.
Got to have so couple tidbits of information. Have them get approved first. Do the knock as well before it gets listed. See what their value's coming in, so we get the best out of that. That will help. This couple's scenario is not as big a deal. It's worth $900. They owe $200 and something. So very, very good equity position, regardless of what they list it for and what it comes back on the automated system for knock.
So what do they do? I mean, knock. How much equity do they give? I mean,
they'll give you up a lot. I think it's up to like $300,000. I don't know the limit on it. I've never had to press that, but they'll give enough to make the deal work on a situation like this.
Because we've used this in a prior deal, and one, because I wasn't sure. I know that they have had substantial equity in their house.
About 55% of the guy you're talking about, we just closed.
Yeah, and he paid off all kinds of debt. And I want to say, I mean, didn't they pull about $200,000 in equity, paid off some debts?
$50,000 in debt, put the rest in the new house.
Yeah, it's a perfect situation.
Then when they sell, they'll clear that out. They don't have a payment on all that. All their debt was paid. It's 6 months coverage on it. Interesting, though, if we flip gears to a bridge loan, you know, the fee on a knock loan is about $10,000 from what I've seen from all the requests we put through. And I'm ballparking on that. If you go to a bridge loan, right, they're going to take 6 months payment reserves still. They're also going to charge you about 2%. That's their fee. So if you were doing $500,000, it'd be 10 grand anyway.
Yeah.
Now, if you were doing 300, it'd be 6,000, so on and so forth. And I'm just ballparking again to give you some differences on cost for it. Now, here's where it gets screwy. And it's cheaper. The bridge loan through Community Bank would be cheaper than knock. However, if you're in the situation, not like this client, where they can qualify for both loans, just because the bridge loan sits 6 months aside, knock has approval through the Fannie Mae, Freddie Mac guidelines for us not to include it. Your other bridge loans, we got to include it.
Yeah. Which,
even though they got the money set aside, pretty jacked.
How are bridge loans at like a community bank or something like that? Do you know how they typically do payments there?
Well, they're going to put similar. They're going to put the money aside though. Interest reserve account, 6 months, same way. Is that what you mean?
Payment, like monthly payment
interest
on the bridge
only.
loan? Okay.
Interest only. Like if you borrow 200 grand, interest only 8%, something like that. So it costs you $400 or $500 a month. I'm ballparking.
But point being, we need to include that.
And your old house. I got to include the first mortgage and this new money.
Yeah. So last house payment could be $3,000 plus another $400
that they're going to put aside, but so you don't feel it, but we do as the lender, and it may qualify you for less.
Yeah.
So knock comes in and takes out that contingency.
Yeah, that's perfect.
Pretty cool.
Yeah.
So worth maybe the extra few grand. Now that knock one, that's option one. 2 would be a standard bridge loan. 3 would be a home equity line of credit. And that is the cheapest way to get it. So these people haven't even sold their house yet, listed their house yet. They're still talking about it. I said, why don't you get a line of credit? Let's start there. It's probably $500 fee.
Yeah, it's cheap.
So they'll open up a line of credit for $300,000. Whether they use it or not, they don't have to write a check for a payment.
Yeah.
So if they don't use it, no payments due. They paid the appraisal fee. And if it's a good appraisal, put that on the kitchen counter when they list their house.
True.
Here's how we came up with our value.
Yeah.
From a third party professional that just adds to the offer, hopefully, that they get a better deal on it.
Yeah.
Pretty slick.
Yeah,
I like all the options. So third best one is, though, if you qualify debt ratio, HELOC.
Yeah. And that's kind of how I have mine set up. Like I don't anticipate moving within the next, call it 6 months to a year, let's say, but I have a HELOC in place for when I'm ready to make that move to have everything set. I don't have to wait for underwriting to get the HELOC and things like that.
Or other investments.
Yeah, true.
Because you're now looking at a VRBO second home. You want to bring that up? You're smiling at me.
Yeah,
bring that up. It's one that you've been looking for a little while on some good numbers. Share a little bit on that.
The area I really like, I think that there's areas of short-term rentals that do really well. I think Myrtle Beach, you can do very well. There's too much competition there. I looked at one property that I was interested in. Same development had 40 different, and there's about 100 houses in this development. So about 40% of the entire neighborhood was short-term rental. So if you're in a cookie cutter neighborhood, chances are
you got some competition.
Yeah, there's a lot of competition. Chances are they're not all rented out. So there's a lot of options there as well.
VRBO is big. Beach in general, though, and you are going to have competition, I'm assuming.
Yeah, and we had some clients that buy in some good spots, North Topsail being one of them, Wilmington, that they do short-term rental and do very well, actually.
Charleston.
Charleston, we have one there as well, or a client there that does well with short-term rental.
Just over the Virginia line, a good client of ours. You dropped off a pie to them. He has a house up past the Virginia line, mountain property.
Oh, yeah, true.
What a great event. Not the sidebar. Can we come back to this?
Yeah.
We had a great pie event. That we have an annual event. We invite all of our supporters.
Oh, yeah,
that was call awesome. Them, our people. We invite all of them in and say, come get a pie on us. And boy, man.
Yeah, it was a good
Carolina pies, local.
Yeah.
Buddy.
It was fantastic.
Man, I've had pie 4 nights in a row. And I went and got ice cream the second night in.
Yeah, I had ice cream. I ran out. I still ate the pie with no ice cream, though.
Yeah, we're at that level,
It's that kind of pie.
My grandma is freezing it. She's going to save some for later.
Yeah, that's a good idea.
The whole pie.
I got through it, though.
Now, the donuts, the donut truck we had on site for the kids and stuff, and wasn't really for the kids, I'd say us.
Yeah.
Everybody else.
I would agree.
Those donuts, I don't think I've ever had a fresher one ever.
A homemade donut, yeah. They're better than Krispy Kreme.
Caroline, your sister-in-law, she says, these have to be the best ever. Where do I find them? Could you imagine if we took them here? And she's planning places to take them donuts. So we enjoyed them tremendously. Thank you to all who came out. We also had wine tasting from the cabin, was upstairs in our office on the lake. A couple people came and said, hey, this is date night.
Yeah.
I thought that was awesome. We had some wine and things going on from 2 local wineries, red and white from each, that you could check out.
You can definitely make that date night. We got wine and we're right on the lake.
I think next year we need to add some music.
Yeah, I agree.
Yeah.
Some live music.
You going to sing?
Am I gonna sing?
Yeah, you want play the guitar?
Maybe I can pick up the guitar over the next 12 months.
You know, one of the guys we closed a loan for 2 years ago, he came and he leads worship music near his property and is a good guitarist. Maybe he'd be in for that spot.
He probably would. You get a free pie out of it.
Singing hymns at the lake, drinking wine, and having pie with some donuts.
Yeah,
Tell me that ain't a good time.
Sounds like a good time.
So it's usually the first week of November, so stay tuned on that. We'd love to have more people who support our business, and thank you. You know, we couldn't do what we do if you weren't out there telling friends, family, coworkers, and the people you care about our business and how passionate we are about taking care of you for your mortgage, whatever part of the journey you're in, whether it's first time, your second house, investment, move up. But we're going to get to this property you found. And you've been looking. You're actually probably going out. As minute we leave here, you may head towards it to get a viewing of the property, see if it fits. Right?
That's fair. Yeah, I'm thinking about it.
I'm pretty excited. We're doing this together. We're interested in it both. We both love to spend time in the mountains. I won't tell them where it's at.
Yeah, I think that's fair.
But we will say it's near the Blue Ridge Parkway, which is pretty cool. Good motorcycle ride for me. Good Jeep ride. It's a good ride no matter what.
It is.
And the view, unbelievable. So we're going to look at some numbers on what he's looking at on this VRBO when we take a quick break. You're listening to The Plan.
Welcome back to The Plan. This is Jacob Roche, and we're talking about a property that Brad and I were interested in.
You were interested in. You brought this one to the table, and
did.
I'm in, buddy. I thought it looked great.
I did. I've been looking for a short-term rental in the mountains for quite some time. And I've been
Why there? Why not the beach? Can we start there? We're going to talk about how you selected this one. Why did you go to mountains versus beach?
Beach. I lived in Wilmington, so I was right at the Atlantic. Too many hurricanes. There was a lot of damage. I had to leave college twice for 3 to 4 weeks. I think the longest I left was 5. So
you personally have distress from the beach.
Yeah, I'm good. I will. I told myself I'm good going to the beach. I'll probably never live there though. So I think that hurricanes, I mean, they just keep coming. But we haven't had one since I left college, which is crazy. It's come through that side. But
so we go to the mountains. That's why you like it there. Now we just had rough weather in the mountains too.
That's true.
How far is this away from Asheville and things?
This is over the state line in Virginia. And the reason why I like this one is the view. The view, I think, is what makes a lot or a unique property for Airbnb.
How far a drive from your personal residence to be able to manage this?
An hour 20.
Okay, very close.
Straight up, going up 77 on it, and it's easy drive for me, so I didn't have a problem with it.
What did you like about the property when you're... Now, did you surf around, in our software where I talked about managing the properties?
Yeah.
You downloaded the app, right?
I did, yeah.
Now, you can set a search in there for looking at properties as well.
Yeah. There's a buyer side there. So
were you doing that, or did you go to Zillow?
I got to say, I was on Zillow.
Oh,
I got a notification in my email that a property you may like, and I clicked on it, and I was like, yeah, I do like this property.
Now, you start clicking around, you're going to get phone calls on it. So our software, you can register for theplan.com, that manages your property, also has a property search feature that you get as free as no one's bothering you.
I need to move over there, but
it's our stuff. You should,
yeah,
right? That's what I'm saying. Okay, so you found the house, not on our stuff, but go ahead.
It's a mile or 1.3 from Blue Ridge, on 3/4 of an acre. No HOA, new heat pump, newer roof, house generator with it. It's a good size house too, 3-bed, 2-bath.
Nice VRBO. The view though is spectacular.
Yeah,
house
is good. I think it needs some work. It definitely needs some upgrades.
Well, what kind of work we talking? Bring the people inside. The painting, man.
Yeah, the
ugly. Like some little old lady was in there painting the walls from 1964 and ain't touched them since.
Yeah, sage green walls, sage green carpet. Not a look these days.
Sage green carpet. Yeah, that's ugly, man.
Yeah,
looks like a Christmas tree got splattered on the floor.
Yeah, that's a fair statement. I would agree with that. Yeah. But I can do a lot of this work myself. I'm thinking
outdated cabinets.
Yeah,
I saw that on there.
Repainting those. I've been able to do those in my personal house, and it came out very well. So I can touch those up. Paint them white, change the handles, change fixtures, things like that. It's a
really big do-it-yourself project that works really well. You did great with that.
Thank you.
And your personal house, you had what color cabinets, kitchen cabinets we're talking?
They were like a dark brown, reddish, cherry oak, I think they called it.
And you were able to resurface all of them. Didn't even have to take them all down, just took the doors down.
Yeah.
Resurfaced them all to that beautiful, beautiful soft white.
Yeah, it's like a soft white now, and I might even do the same cabinets on these here, but definitely need some upgrades on this property.
Inexpensive though. I think when we talk upgrades, people think of budgeting, 20 to 50,000, or depending on the price range you're looking at. Now this is in the mid 200s.
Yeah.
If we didn't mention that, but you don't have to spend that much on cosmetics. People need to like the feeling of being there, and you can do a lot with furniture, decor, and paint. Yeah.
The view sells itself.
And no green carpet.
Yeah. The view sells itself, in my opinion, but small things like upgrading the bathroom faucets.
Those are all little things that you've been able to do that is cheap.
Fans, light fixtures, things like that. It would make this property attractive.
Brother, I think if you just get rid of the green carpet, you're going to get an extra $10 a month.
I agree with that.
It's not going to take much from that. Green carpet don't work.
Yeah, exactly.
Now, what about the outside? Did you view too much on the outside besides the gorgeous, gorgeous view over the mountains, Blue Ridge?
Outside, I like. The outside has a very good front deck, or a deck to see the awesome view, really.
How about landscaping? I didn't notice much as we were browsing some photos and things.
No,
do they have much?
Not much landscaping. No, that's something that I would need to do. One thing that I was thinking of adding would be something like I'm saying, to make it unique property would be to have a hot tub over with a perfect view.
Are we renting this out, or are you going there all the time?
Hey,
honey, we got the cabin all to ourselves. We got a hot tub ready to go, and it's beautifully repainted with no green carpet.
Yeah, exactly. Well, I'm
hot tub is nice. It's a big deal. I'm joking, but it is a big deal in the mountains to have something like that.
This is for me too. Yeah. Also, I would obviously looking to make money on this, and if it is rented out 100% of the time, you won't hear from me. So I'll be happy with that.
You got to do some furniture. You got to do some minor. We're going to call them minor upgrades. I'm going to call them cosmetic. I don't think there was anything major that we saw on that. Okay, so we got the property, like it. Going to go see it. What were the numbers like that you were able to review around the area?
The ones that I pulled, AirDNA says $190 per night.
Now, AirDNA is an actual website.
Yep.
You have to have a membership for that?
Yes, and that's expensive. So if you are looking at short-term rentals,
call you.
One that I would recommend is
not call you.
Yeah,
it's free.
Call me, because I'll be able to do it. But B&B Kelk is what it's called.
B&B Kelk.
Yep.
C. C-A-L-C.
Yep. So and that,
say that again. That whole website.
B-N-B and then C-A-L-C. .com.
And what is that? What do I get on that?
That's free. It's free. You get a couple free analyses, but they pull from AirDNA and then another one called AirBix. I've never heard of that one, but it's similar to AirDNA. But they pull from those two, and then they pull 40 comps around it. So yeah, you can check out all of it. It lists out how annual revenue, nightly rate, and
you've done a
occupancy.
lot. You've done a lot of these. So if someone listening would like help just analyzing a property, this is something we can help with. Plus, we partner with excellent real estate agents and financial planners in our people we know, 704-412-2727, or go to fortheplan.com. You'll see a contact button at the top. You can reach out to us as well.
Yep.
Well, so the numbers, how did they look? Dig me a little further.
So what we ran it at annually, it would cost us about $20,000 total.
You put in about 20 to 25% down. We ran it at about a 7.5 interest rate.
Yep.
Non-owner occupied investment.
So full year.
20 grand.
I'll call it,
Wasn't it about 22, 21, 22, I thought?
It was 20 flat, and then for us to break even, need to do 50% occupancy with $125 a night, which that's extremely
$125 would be real cheap on that.
Yeah,
right?
To break even.
And because you know that because this website's also provided you with some other examples of what's currently rented and how much per night.
Yeah, and it says how far and
how much they've been rented for. Like not the dollar amount, the time, like the 50% of the time or whatever it was.
Yeah, one comp that I pulled was 54% of the time. Pretty similar. Great view. Not great house. I would say actually worse. I would say not. Yeah. Condition wise, I would say 5 out of 10.
Trying to be nice and not knock the other house.
Yeah, try not to. Yeah, but
my house is nicer than your house.
Wonderful view they got.
But you should be able to get more rent, is your point.
Yeah.
Now the house was bigger that you're comparing it to.
Yeah,
this one is
slightly. The next one is a lot. I don't know. This comp is a little bit different. I think this is more of like a luxury. It's rented 100% occupancy.
Wow.
So, and that uses like a 90-day average. So I checked myself, and there's not a single day until next February that can be rented out. So it's rented out.
Really neat.
Every month, yeah.
Yeah, so that's great cash flow for them.
And then this third comp, and I won't list out what it is, but it's the annual revenue is 24, and there's
24,000.
Yeah, 24,000. I'm sorry, and but there's no view. It, in my opinion, kind of looks like a shack in the woods.
I saw that one.
So this, I mean, and I think
looked like I was going hunting, staying at that one.
Yeah, you're right. It could be a what do you call those in the trees?
A blind.
Yeah. Yeah. But so 176 a night they charge, but 35% occupancy. So
wow.
Yeah. So I mean
So you ran your numbers on this property, running it at what, 50% occupancy?
Yep.
Kind of in the middle of all these.
Yep. Where was that? I had that right there. Actually.
50% occupancy, and then that would your cost to carry it was about 20 a year.
Yep. And I'm at 170 per night, so less than the other one that I said was kind of a shack in the woods. 31 annual revenue.
So you're bringing in around 10 to 15,000 per year at 50% occupancy. Unbelievable.
And that's the reason why I want to go short term, is because with the unique property, with adding a hot tub, maybe a fire pit with some string lights. String lights always makes everything better, like we've said on the show before.
I agree. Decorating the outdoors.
Yeah, and I think that and that's where you cash flow. I don't think that long term rent, especially in the
not there.
I also want a house in the mountains too, but I don't really want to pay for it, right? So my goal is to be able to at least break even on this, but obviously
with some time you spent there that was high quality.
Exactly. Spend a weekend. I mean,
right.
I know payment wise, I know if I'm just going, me and my wife, out for a mountain weekend, I know it'll be around there. So if I could be able to maintain this payment through people booking and things like that.
Free vacation house for you going up in value.
Exactly. Yep.
Breaking even, and you ran the numbers out of. So if you need help with looking at expanding your portfolio, you know, a lot of times we talk about the journey, and on the show, and the journey being buying your first house, the next piece buying your family house, the next piece maybe buying an investment property or a second home like you're looking at now, or even going into kids moving from college and downsizing, like the story I mentioned, using the alternative programs that are out there to free up equity, or even going into retirement. We've got a stage for that we can help out in any of them. And if you want numbers ran on DSCR or buying it as a VRBO, all these abbreviations kind of crazy, right? You know what I'm saying? Like, if you weren't from around here, man, you'd be like, what's this guy talking about? DSCR on a VRBO is A-OK.
A lot of letters.
Yeah, so we can help uncode some of the ways to get there at fortheplan.com. Schedule a free consultation with us. Jacob, anything else on that property? And we'll update next week how this went.
Yeah, I'm going to go check it out. Hopefully I'll be able to get out there sometime this week.
He's on his way pretty quick. I can tell it. He's got the itch. He's found the property. If you have found the property you'd like to get more details on, that we can help run the numbers, make some sense out of moving equity around, and making sure you're in the right program. Seller paid closing costs. We are here to help. Go to fortheplan.com or call us, 704. I'm going to get this right. 412-2727. Direct dial, go to 855-4-THE-PLAN or fortheplan.com. We'll see you next week.